Hello, fellow intelligent investors. My name is René Zellman, and in today's video I will explain why one of the hottest stocks on the market, so that's Tesla obviously, is nothing more than a gamble. And you might believe me or not, but I think I can prove my point. Apparently, Elon Musk, the CEO of Tesla, is now the richest man in the world, richer than Jeff Bezos, for example. But I think it's only a matter of time until the share price will start plummeting. And so I think it is highly likely that Musk's status as the richest man in the world will be of somewhat short duration. So here's what I want to cover in this video. First, I want to briefly point out why I think it is likely that we are in a late stage market phase. Then I will compare Tesla's narrative to the fundamentals of the company. And lastly, I will point out a couple of simple facts that underline that Tesla is painfully overvalued. And I think even non-investing people will understand these facts, because those facts are really eye-opening numbers. So without further ado, let's get started.
Have you ever wondered how you can make your hard-earned money work for you? Have you ever dreamed of building generational wealth and leaving a legacy? My name is René Zellman, and I'll teach you how you can manage and invest your money with confidence, a long-term vision, and without losing your mind. Join me on my journey of intelligent investing and learn how smart people can compound their money effectively and accumulate wealth.
So before I start, I just want to let you know that you can help me out a great deal if you just quickly hit the subscribe button, like the video, or leave a comment. Any support that would help me grow the channel is obviously much appreciated. Alright, now before we get to Tesla itself, let me just briefly point out that one can observe multiple warning signs that kind of show that we are in a late stage of the market cycle. And let me just mention a few of these warning signs here. Well, firstly, the Buffett indicator, that's a total market capitalization to GDP ratio, recently broke through its all-time record, which it set in 2000. And we all know how that period ended. Secondly, apparently the hot new way to take companies public are so-called SPACs, short for Special Purpose Acquisition Companies. In 2020, there were 480 IPOs in total, including an incredible 248 SPACs. SPACs have raised more equity in 2020 than over the entire preceding decade. Typically, a SPAC doesn't buy a whole company, but rather acquires a stake in it, and does this pretty much without investors knowing what the acquisition will be or how much it will cost. Basically, investors have to trust this sponsor. So obviously investors do know who's in charge of the SPAC, and they know that the deal has to be done within 2 years, or else the sponsors will have to give the money back. But that's about it. So the speculative character of most SPACs should be obvious here, I think. Thirdly, there is a record low short interest. Short interest as a proportion of market capitalization for median stock in the S&P 500 hit 1.6% during the last year, compared to an average of 2.4% for the last 15 years. Fourthly, margin debt has hit a new record. According to the Financial Industry Regulatory Authority, investors borrowed a record $720 billion against their investment portfolios through November. Generally speaking, one can say that the use of margin can magnify your gains. But using margin can also end in a huge financial disaster. Another indicator is that on Twitter there are 12-year-olds with 20,000 followers who are basically giving investing advice. And here's another indicator. Thomas Petterfy, he's the founder of the Interactive Brokers online trading platform. Well, he warned that the current environment is an environment unlike anything he has ever seen before. And then last but not least, there is the EV bubble. EV stands for electronic vehicle. And maybe some of you are familiar with the name Nikola. The company basically went public as a reverse merger with the SPAC and was valued at $3 billion. Now obviously the stock rose tenfold to a market cap of about $30 billion, only to drop down to a market cap of $6 billion again. Now, why is this worth pointing out, you may wonder? Well, interestingly, Nikola never sold any vehicles it has produced. or in fact the firm has actually never produced a vehicle, and it has never even built a factory in which it could build the drugs that it plans to sell. And according to the short-selling investment firm Hindenburg Research, the drug that was seen or could be observed in one of Nikola's promo videos, who's supposed to be a hydrogen-powered lorry. Well, that lorry doesn't even have an engine and was basically just rolling down a hill. And by now, the company Nikola itself has admitted that that their original claims regarding the video were maybe not quite as accurate as they had originally claimed. And the whole Nikola scandal basically showcases once again that there are way too many wannabe investors out there, right now I would call them gamblers, who have no clue what they are doing. They aren't buying businesses based on their fundamentals and their growth prospects, but rather based on a stock's past price movements and its speculative appeal. And this brings us to Tesla. I think when we're talking about the EV bubble, it is inevitable that we need to talk about Tesla as well. Generally, let me say this. On this channel, I try to avoid talking about specific stocks, or at least I don't want to do it all too often. I know there are countless of channels out there that are releasing a new video every 3 days in which they basically discuss a new investment idea, a stock that could go up 5x. But personally, I'm honestly 100% convinced that being overly active in the markets will kill your returns and will lead to disappointments. Charlie Munger, so Warren Buffett's best friend basically, he said the success of Berkshire came from making 2 decisions a year over 50 years. So put in a nutshell, I would say, I think on most investing related social media channels, there is already a lot of noise going on. And people are spreading a lot of bad advice, if you would ask me, just to get clicks. And actually, I don't want to add to that. But by briefly talking about Tesla's stock and its current valuation, I think I can make a positive contribution. If only a few new and inexperienced investors consider the risk that I'm about to talk about or to point out, I think it was already worth it to produce this video. And just to be fully transparent here, but I think that should be obvious, I don't own any shares in this company. So let's compare the Tesla narrative to the fundamentals of the business. I'm actually well aware that there are some Tesla fanboys who basically think Elon Musk is Jesus and who won't like what I'm about to show you. But I'm trying to focus on the facts. So before you start berating me in the comments down below, please listen to my arguments first. In fact, I think that every intelligent investor should be listening to someone else who wants to present a bear case or wants to highlight some risks. As Charlie Munger recommends, try to always invert your ideas. He says invert, always invert, and try to think of the risks of your investments. Generally, I have the impression that a lot of retail traders or speculators are just buying the stock of Tesla because everyone is talking about it and because the stock price has performed so exceptionally well in the recent month. For instance, Tesla stock surged after the announcement of a stock split, even though a stock split doesn't add any value to a company or to the value of a company. The company simply doesn't increase its profits just because it splits its stock. And similarly, Tesla was added to the S&P 500 index on December 21st, and the stock has rallied more than 30% ever since the inclusion in that index. And overall, Tesla stock is up more than a whopping 900% within just the last 12 months and has reached a market capitalization of around $770 billion as of January 8th. And there is certainly a narrative for this impressive run. The Tesla story has appeal as the company is basically at the forefront of 2 of the biggest trends in the automotive industry or automotive market, namely electric vehicles and self-driving software. So let's compare Tesla's market capitalization to what the underlying business has actually accomplished within the last 12 months. In my view, that relationship has basically gone from absurdity to outright madness. If we take a look at Tesla's stock chart, its long-term stock chart, one can see that the stock had pretty much done nothing for 6 to 7 years. And then boom, the stock price basically took off. Is there any reason for this besides people starting to speculate? Well, let's take a look at the fundamentals finally. Let's start with Tesla's revenue. Well, the company has accomplished a very impressive 10-year compounded annual growth rate of 70% regarding its revenue. The year-over-year growth between the years 2018 and 2019 has only been around 15%. And this year, Tesla was also able to increase revenue another 15-ish%. So don't get me wrong here, considering that we just went through a global pandemic, this is certainly a pretty good result. But it just doesn't justify the development of the stock price within the year 2020. In addition to that, the company is still barely profitable. If we just take a look at Tesla's operating cash flow, for instance, we can see that the development here is also not supporting the development of the stock, even though the development was also rather positive, I would say, especially if we compare it to the previous years. Lastly, Jeremy Grantham wrote in a recent GMO comment titled "Waiting for the Last Dance" that Tesla has risen some 800% since the fall of 2019 on the back of just a 17% growth in vehicles sold. So that's yet another disconnect. And based on all of these figures that one can basically look up within minutes, it should already become apparent that Tesla might be one of the biggest speculative bubbles in history. Okay, before I move on, I would love to know what you think of Tesla stock. Do you think the Tesla stock is massively overvalued? Why or why not maybe? Let me know in the comments down below. Now, in addition to this comparison between the stock price and Tesla's fundamentals, let me share a few fun facts that might also be rather eye-opening. Well, first of all, with a market capitalization of now over $700 billion, Tesla's market capitalization accounts to over $1.5 million per car sold this year, versus, or in comparison, $9,000 per car sold for GM. I think these numbers are rather staggering. Moreover, the following visualization stresses how ridiculous Tesla's market cap is in the first place. Tesla basically has a greater market cap than the stocks of the Fiat Chrysler Group, Ford, Honda, BMW, GM, Daimler, Volkswagen and Toyota combined. Now, just to showcase how ridiculous this is, let's look at the number of total car deliveries in 2020. The aforementioned group of companies sold approximately 100 times as many cars as Tesla did. Tesla basically has a market share of 0.6% as of now. And I guess there are no more words needed here. Now let me add another interesting fact here. Michael Burry, who's known as the Big Short investor, he also recently pointed out in a tweet that Tesla now has a greater market cap than the sum of all other US automakers, all of the European automakers, and all the Korean automakers, with Honda, Mazda and Nissan thrown in there as well. So Burry was advising Tesla CEO Elon Musk in a tweet that was basically now deleted to sell as many Tesla shares as possible at the current sky-high valuation to generate as much cash as possible that he can then use elsewhere. And Burry also added a table to his tweet that not only compares the market capitalization of Tesla and the other car makers, but also their operating income, short EBIT or earnings before interest and taxes. Basically, it's $100 million to some negative operating income, even though I think his numbers are slightly off here, and I think Tesla's operating income is actually positive for this year. Alright, as this video is already getting rather long, I decided to actually do a second video, which I will release fairly soon. Maybe by the time you watch this video is already online on my channel. And what I will do in the second video is I will take a closer look at Tesla's valuation and compare the current valuation to the valuation of the car industry. And in addition to that, I will do a reverse DCF to figure out what kind of growth rates the market is pricing into the stock right now, discuss whether those growth rates are realistic by any means. So if you want to watch this video, please make sure to subscribe to this channel. So what's my conclusion? Well, in early December, Elon Musk himself already warned staff that Tesla's high-flying stock is basically dependent on profits continue to rise. If it looks like they are not, the shares, quote, will immediately get crushed like a soufflé under a sledgehammer. And I think he's right. Even if you do believe that Tesla is a revolutionary company, and I would agree with that claim, they are still operating in a below-average industry and are selling low-margin products. When reality eventually hits, you can basically expect a collapse of the share price. And with the share price falling, Musk will then no longer be the richest man in the world. But let's wait and see what happens. Maybe I'm wrong. Only time will tell. And as always, may your finances and investments prosper. Good luck.